right, guys. Let's see. Let's go. Ooh. What is going on, everybody? Okay, that was me. Okay, let me put the chat up so peeps could see. Hey, what's up? Ooh. So annoying over here. Wait, I think there. Okay. I think everybody could see that one. Okay. Alright, Lionel's here. Thank you. Appreciate you. I don't know how long I'm gonna stay on here, just so you know. Maybe an hour. That's usually my I think the time at my water over here. But I think my limit is 1 hour. Okay, how everybody's doing today? Are you at work today, Lionel? Okay, not that one. Alright, so let me start my show. Normally, obviously, this is the price action day today. It went up a little bit, of course, you know. It's a usual price movement, obviously. Just cratering. Doesn't want to go down to less than 12, right? Perhaps it's gonna hit this low again. Perhaps, I don't know. Anything could happen at this point, but if you look at the RSI right here, that's pretty low for today. So that's why you see that little bounce right there. RSI very low, and usually it's like when it gets this low, it's tend to do that thing, but then it cratered down again, grinding back down, and then boom, back up. So there's no volume into this stock. The same shenanigan, right? If you look at the volume, it's even less than yesterday. 2.7 million shares being traded back and forth. But if you look at this one real quick, okay, so this one shows the short volume interest, right? Or total short volume reported, right? And so look, it's back up to 71% already still. So if you look at the volume in terms of how many shares is being shorted, well, it could be because the volume is so low as it is already, and so they had to short at least 1.2 million shares being shorted today. And also too, look, off exchange, obviously, some of that volume went off exchange. And if you look at the percentage right here, it's 35% went off exchange, and about 0.18% of that is short exempt. Yeah, I mean, again, it's nothing to see, nothing to hear, nothing to, looked at here whatsoever. The fact that they've been shorting this company 1 million share at a time, that's like hundreds of millions right there. Within that just a couple months alone. So I don't know. Hey, is this crime? I don't know. I'm just telling you, this is the data that I see. And if you don't see any anomalies that's happening over here, I mean, come on, look at this. 71%. If you look at like maybe, I don't know, what's the, I don't know what company should I look at. Oh, Best Buy. How could I forget? Best Buy. Just to see what's the short volume is, right? Oh, okay, that surprised me actually. 65%. So even in this one, it's being shorted. I think it's because of the whole retail, thing. The whole retail sector is being shorted like crazy because, again, retail spending is going down and all that stuff. So, okay, you're off. That's good. Thank you. Alright, so that was the showcase right there. Honestly, I don't have much topic to talk about, but let's look at the S&P real quick because it was kind of poopy today. If you look at this one right here, so the all-time high would be this line right here. So it might still be trying to fake people out, to try to trap more people in even. But again, like, I'm expecting a crash here. I don't think it's gonna crash all in one day, obviously, but it's gonna be pretty quick. If things escalate, people just don't believe in the narrative anymore. Apparently, Mark Zuckerberg was selling half a billion dollars worth of Meta at the end of the year. Just got reported. So I don't know. I think I got that from that guy Bill Donahue. That's the Phil Donahue, or I don't know. The guy AMC. Okay, so I feel like I'm stumping today. Netflix is going up today. Netflix? Oh, I don't know. Like, some of those stocks usually it's pretty weird on what are they doing. What the heck just happened? Oh man, there you go. Something's okay. So if you look at Netflix, no, it went down today. Not today. Seems like it kind of flatlined, but yeah, I don't follow this stock that much, but it seems like it's coming up here to fill up this gap right here, and I think the next would be downturn. So that's probably what's going on there. But again, hey, not a technical analysis person at all. So again, GameStop is up a couple percentage, but again, the short interest was pretty high at that time. So there you go. So with this show, might be a really short one. I don't know. Really depends on how I feel after. But let's look at this real quick. Now, I like to kind of stroll down the memory lane here because just to, I guess, to showcase Ryan Cohen, because like maybe people don't really know who he is, right? That's why people are like, oh my god, like this guy is this and that. Really? Is he really that? Like, then you're thinking about it, saying that he's like, failure or whatever, right? But before that, when he didn't even have a track record of like success before Chewy, right? I'm talking about before Chewy here. He was IPO Chewy right here with this network, right? But guess what? guess how they're covering him then, when he was, or when they're trying to promote IPO to the public. So and this is the first time, anybody knew about Ryan Cohen, knew who it was, right, publicly, because like regular people wouldn't know unless you invest in his company in some way. You wouldn't know who he is. So he became mainstream during Chewy. And even then, like, I think he only become mainstream after GameStop, actually, because people didn't even know it was Chewy, but anyway, or at least people who doesn't invest in the company, right, wouldn't know who the CEO was or who the co-founder was, who founded Chewy. But anyway, my point is that back then, think about it, before Chewy, Ryan Cohen was not on the map at all, right? And back then, he had no track record to beat, to have any other company besides Chewy here, right? So Chewy was the first success. But let's listen in, and again, I am kind of speeding this a little bit up here, so I will be right back.
CEO who organized the sale to PetSmart in 2017, Ryan Cohen. Ryan, congratulations.
Thank you. I'm glad to be here.
So you're not a shareholder in Chewy.
No.
But I would imagine you have a lot of feelings about seeing this company that you built starting in 2011 go public today.
It's a very, very emotional day. It's humbling. It's the culmination of 8 years of sacrifice, dedication, lots of hard work, an amazing team. It was far from an overnight success, and see it today is just incredible. So I'm very proud.
One of the things that's been coming into focus in terms of this IPO is how much capital is being raised and how much of that capital is going to go back to paying down debt at PetSmart versus back towards operations at Chewy. What do you think about that?
Yeah, I can't speak to exactly the capital structure, but what I will say is that it's a capital-light business and it requires very little to engender its growth. And so, the company has gone from $200 million in sales in 2014 to $3.5 billion in sales in 2018. And it's...
Wait, did he say 200 million to 3 billion? Say that again.
Has gone from 200 million in sales in 2014 to $3.5 billion in sales in 2018.
So 300 million. No, 300 billion. No. I'm sorry. My brain does not work today. Darth is here, or just dropping in to hit the like. Keep up the good work. Oh, thank you. Appreciate you. I just pinned your comment upstairs over here so people could see that. I appreciate that though. So I wanted to see, okay, so he's saying that he was able to grow $200 million, right, to $3.5 billion. Okay, so let's do the math real quick. How much growth is that within how long? Okay, so 3 billion divided by how many times is that? So 200 million is that. So if you do 200 million would be that. So 17 times. He was able to grow his business 17 times.
Under its growth. And so, the company has gone from 200 million in sales in 2014 to $3.5 billion in sales in 2018.
So 14 to 18, that's 4 years. Okay. So that's a 4 years growth. 4 years. Okay. So he was able to 4x his money or his sale in a year. But again, back then though, it's easy to grow from 200 million to $3 billion, right? But it's harder to grow from 3 billion to wherever. It's like, let's say 20x from here, right? So that's around the ballpark of what we are right now. I'm not saying it's impossible to grow it that fast, but I'm saying it's harder to grow it that fast when you have $1 billion already, right? Not impossible though. You have people with the track record of Ryan Cohen. Of course he's gonna work his ass off to do that. But what I'm saying is that Chewy was small enough so that the growth is a lot steeper, so to speak, right? But anyway.
And it's burned through about $140 million, all of which has gone into investing in new customer acquisition and future fulfillment centers. And so it really is a function of how quickly you scale the company. But at any point, we could ratchet it down the marketing spend and bid and profitable. But for us, the strategy has really always been about scale and market leadership and building a really big business. And the governor of growth has always been free cash flow. And so we've always been very disciplined about that.
You yourself had a nice exit a couple years ago, got some free cash. Are you investing in IPOs this year?
Not any yet.
He's like, I'm a smart man. I don't invest in IPO, okay? I build business. Of course, like in the beginning of the show right here, the woman was asking if he owns any Chewy share, and he said no. Well, because again, like usually founders, they don't really hold on to those shares because they already, kind of sell the company for whatever price. But over here, of course, they're, the look at the news, like look how happy he is, right? He tried to promote this thing to you, to the shareholder. That's why they're so happy to have him on then, right? Not sure. Hi. The chart doesn't look good right now, but Chewy helped take care of our pet by providing affordable prices. Okay. Are you talking about right now at the moment, Chewy? Okay, let me see. Oh, wow. I didn't even notice that. Well, of course, again, like this is a, IPO'd and all that stuff, and it's already been, again, Ryan Cohen is not in here anymore. This is not the reason why I show you guys this one at all. I'm showing you this is to juxtapose between the news media, the same news channel here, who covered Ryan Cohen then, when they're trying to promote Chewy to the public, right? How happy they are, how, the question was kind of like the softball questions, right? And it's not meant to attack Ryan Cohen, but meant to elevate Ryan Cohen being the smartest guy, right?
Are you investing in IPOs this year?
Windrobe. Okay, what's going on here? Chewy is legitimate. Now Ryan Cohen is gone. Oh, okay, all right. But look at the price, though. I mean, really? You think this is a good thing? So if this is a good thing, that the price coming down, that it's being legitimate? Now that Ryan Cohen is gone, look at the price. Have you seen the price lately? Is this being legit? If this company is legit, what is this company? The same price, right? I mean, even cheaper with Ryan Cohen in it. So you only invest because Ryan Cohen is not in it. Is that what you're saying? If Ryan Cohen is not in this company, you're gonna invest in it. Is that what you're saying? What the hell? So that means you're just shitting on the guy. But it makes no sense to me, what you're saying.
Not any yet.
Another question specifically about the pet business. Omnichannel is big right now, blending physical and digital retail. Given what's happening with premium brands and treating pets like people, if you were doing that, would you do it in urban areas, or would you do it kind of in the suburban strip malls where the Petcos and PetSmarts have been in the past?
I really think it's all about creating an experience for the customers. And so if you're going to, invest in physical stores, it really needs to be focused on delivering an experience where people want to bring their pets into the store. And so I think it depends on the category, but to the extent that retailers are focusing on creating an amazing in-store experience, then I think omnichannel strategy can make a lot of sense.
You sold for 3.3 and you got a 4.
Not quite understand the omni-channel thing, but I think what he's saying is like if you want a pet food, store front, you really want to create a place where they could bring their pet to the store or something like that. I've never seen a Chewy pet food store before. Is there a store? I don't know. Windrop over here seems to care about Chewy. Do you know there's a physical store for Chewy? Gamestop has been down for 2 years now. Okay, we know that. but you're mentioning about Chewy currently. How long has it been down? 1 year, 2 years, 3 years. So what are you saying? What does that mean? It's like, as if like that holds any water to that. I'm trying to understand you. Like this is why I analyze what you're talking about sometimes. I'm like, oh, let me double check to see if he's actually being serious about what he's saying about whatever, right? So to come in here and says Chewy is legitimate now that Ryan Cohen is gone, but at the same breath you're like, huh? It's undervalued. Oh, okay. How so? Educate me, please. Like, throw me some numbers.
$14 billion market cap today. Did you not sell for enough, or has there been enough growth since then to validate today's market cap?
Yeah, I mean, I think, we were, at the time, we were running a dual track process, and it felt like a fair deal to us at the time. It worked out really well for the team at Chewy. It worked out really well for the shareholders at Chewy, and I'm glad to see that it's working out well for PetSmart, so I'm very happy.
I love the story. Your original idea was jewelry.
Yes.
Right? And what switched you to pets, and are you glad you didn't go into online jewelry?
Well, yeah, I mean, we weren't very passionate about the space. I was at a neighborhood pet store one day with Tylee, my poodle, and it was an amazing experience. And so I had an epiphany that if I could really recreate that experience, but do it online and at scale, and you think about all the small things we've been doing since day one, right? The handwritten holiday cards and the pet portraits and the flowers, and it's really bringing a face to e-commerce. And so we were able to differentiate ourselves and build a really big business. And the vision since the beginning is really to build the largest pet retailer in the world. And it's been an incredible journey.
A lot of
Really? Are we still thinking about that? Okay, so it wasn't profitable until he left. Is that statement really true? Come on. One job. You know how you guys. Oh, Gamestop, sorry. You understand that statement is kind of like I don't know, short-sighted, right? So he created Chewy, didn't he? He built it from the ground up. Did he not? Right? It's his company, or, co-founded with some other guy, but it's his company. So it has some value in it. It has nothing to do with being profitable or not. I'm sure if he continue to be in it, it's probably will be profitable, and it probably wouldn't be at the price that it is today. Again, that's me speculating, okay? But let's see. $11 million. That's so profitable. Oh my God! Like I can't get enough of this. So just so you know, you guys, this is Chewy. I'm looking at this balance sheets right here to confirm what Winthrop is saying. It's like, oh, because Ryan Cohen's and it's like, really? Are you? Anyway, Chewy was never made profitable. So what? He built the freaking company, the brand, the recognitions, and all that stuff. So it's not about being profitable at that point, at the point of IPO. The IPO was to, the point of IPO is to go to the public and raise more money in order to expand the company. Every IPO does that. You understand that, right? And look at this. There you go. They just become profitable. And was that the fault of Ryan Cohen? He's not even in it. It's like, what the F? When did he leave Chewy? Hold on, when did Ryan Cohen leave Chewy? Okay, so Ryan Cohen left 2018, right here. Okay. Gross profit. Okay, look. Gross profit from this to this. From 2 billion to 3 billion revenue. That's nothing? Okay. You have a point there. Net income. But look, before that, like you have to see the trend. Hold on, let me see a trailing 12 here. It's probably a better one anyway. There you go, trailing 12. It's like it was losing what, $55 million at the time. So he went from losing 94 to 55. Oh no, hold on. Sorry. That was not the year. I apologize. Hold on, let me go back. Scrap what I just said. So let's just verify our facts here. So Ryan Cohen left this year. Okay, so from here to here, that's probably when it's IPO'd. So when he left, it was this one. Okay. All right. Okay. So 2016 right there. Okay. Operating income, operating expenses, because they were probably scaling up. That's why they have to expenses a lot of stuff. Okay. You have a point there, Winthrop. So what do you want me to do? You want me to sell out of my GameStop because he's in it now? Because Chewy is not profitable under him. You want me to sell my GameStop share because he's in it. Is that the point of this whole thing? Okay. Anyway, yeah. Let's just sell out. Let's just sell out. Ay. So, of course, I get it. I get your point. Alright. They weren't profitable under Ryan Cohen. But why would PetSmart spend $3 billion to buy that company? Why? It's like, are they that dumb? Or were they overpaying? Or what? It's like, answer me that. But anyway, let's go back to Chewy here.
Looks like,
and that's another thing too. It wasn't profitable, right? But why are they so happy in pumping it to you? Look at the news. Look how.
to point to the ill-fatedpets.com and the
Look how happy this person is, right? Pumping it to retail, right? Shouldn't they be saying those things? Hey, Chewy is not profitable yet. Don't be enthusiastic about buying into this stock, right? But they keep pumping it up, right? Look, people are buying it up, right? So what gives? I mean, if this company is such a terrible company to own, why would the news, is pumping it up? So, what's going on with He built it, sure, but he never made it profitable. It was not intended to. He was not intended to stay with the company because he already, he wrote an article about it. If you want to find out about it, go find out why he left Chewy. I bet you anything because he didn't want to work under anyone, right? Because he's a lone wolf, right? Because he would have been, under the thumb of some board of director who doesn't care about the actual company, and run it to the ground. So that's just my speculation. I don't know that for sure. But yeah, I mean, come on. Again, like, why are they pumping it to the public, knowing that it's not profitable, right?
Late 90s, early aughts. I mean, that was the example out there, the biggest example out there, I think, when you were starting the company in 2011. Why'd you still move forward with this model?
I'm contrarian, and so I think that created really white space where you didn't have that many people going after the category, and so it created a big opportunity for us. Having said that, it was a low-margin business that required getting to scale in order to make the economics work.
How much does fast delivery matter in this category? Because you got heavy bags of pet food often. People know when they're getting close to the bottom of one, and for Chewy, the subscription delivery has been important. Does it really need to be that fast?
Yeah, I mean, I personally think so. I think within e-commerce today, it's really table stakes to perfect that flywheel of fast shipping, being competitively priced, and then having the selection. And we really differentiated ourselves by being the category experts and, really bringing a face to e-commerce. And really, at the end of the day, we just happen to sell pet products. Frankly, I think, if you're in the business of delighting your customers, I think that you could be very successful, and I think we would have been successful, frankly, in any category.
Talk about a little what you know about, say, my pet. Right? You probably know how much he eats per day, and thus when it's time to order more food, when his next checkup is due. Is that all wrapped up into various algorithms you have back home?
Yeah, absolutely. But I think that we try to create an experience that's really frictionless, and so whether it's the one-page checkout or just all of those things, we don't want to inundate you. We figure if we deliver an amazing experience, you'll come back to us, and then we go and we do all of those small things that really create that wow experience, and you tell your friends and family, like, this is the best experience, this is where I need to shop.
So it's not a shower of notifications and taps on the shoulder.
Exactly.
Right? You're looking for the consumer to touch back themselves.
Totally. Exactly.
I want to go back to the delivery piece of this for a minute, because one of the things I found fascinating in reading.
And that speaks to his character too. Like, he's not asking anybody to, invest in GameStop. He's just like, hey, if you see the number and you like it, I don't like. And that's, again, like, this is the type of people that I resonate with, because they're not there to bombard you with BS, right? Remember the guy who was like asking, hey, is there a notification when to keep track of your customer, and so keep nagging them to buy your pet, the food, when it's gone, you need to tap them on the shoulder, right? And his response was like, no, you don't need to. You really create an environment for people to just welcome in. And when they need us, they will come to us, and they will think of us first, type thing, right? So to me, that speaks volume, because it's something that will, I guess, like, your first choice, right? It's like making the company, it's hard for me to think of a word here. It's like you want to shop there. It's like, what the heck? I can't even think about this word. Sorry, you guys, I am flustered right here because of Winthrop over here. What has Ryan Cohen done to create shareholder value for GME? You asked the same question, and I don't know what respond you want me to do. I mean, what would be your response, Winthrop? I mean, I really try to understand you, really, from a human level. Okay, I'm treating you as a human right here, but I don't know what response would keep you happy. Are you saying that he's not creating any shareholder value? And what evidence do you use in order to do that? Once he has nothing left to cut, where will I can't even see this one. Where will the company grow? Okay, he has done anything to create. Hence the downtrend. Oh, hasn't done anything create. Okay. Alright. Sure. Alright. Downtrend means nobody create any value. Okay? So you're saying price dictates those things? So you just worry about the price action. So price dictates value created. I think you're wrong. You are evaluating it the wrong way, in my opinion. Because fundamentals should dictate that. So when GameStop was up here, are you saying that they were the most valuable company? Hold on, let me see. If downtrend, if you're saying that price down now means that Ryan Cohen didn't create any value, then when it was up here, he was create a ton of value. Are you saying that? He was the biggest genius, right? Up here. This was Ryan Cohen. Being smart, being a genius, create the maximum amount of value over here. It's like I think your analysis is flawed in that sense. Because it's not about price action. You know, price action will comes after that. Again, we all know what happened back then. And so, you know, to say that because the price is down, therefore Ryan Cohen doesn't do shit, it's not a correct assessment, in my opinion. Right? Because what value are you talking about? Like, what kind of value do you want to see him do? You know? Again, I'm going back to the balance sheets over here, and I love everything about it. You know, and you're saying, oh, when he stopped cutting, what will he do? Well, just wait. How about all of us wait? What's going on? You think he doesn't create any value, so sit on the sideline. Don't invest in it, right? You don't even know Ryan Cohen cost average on. What do you mean I don't even know? What difference does it make? I think it's around $4 or $5. So what? He's a CEO. He's a chairman. He saw the value back then when I didn't see it. So of course he get it. He get it at a cheap price, right? You know what I know too? I know that he bought recently, 6 months ago, at $22 a share. $10 million worth of his money. So what does that mean? He bought at a higher price than it is today. So what does that say to you? Right? So hi from the token team, we love you so much. Please sell coming. What? People. But yeah, I mean, I don't get your point sometimes. But again, like, I'm trying to understand you at a human level here, and I do appreciate you coming in and trying to like put your 2 cents in. But to me, again, I'm trying to, like, if you could find or give me some reason to not invest rather than like give me a number or something, right? I don't know. That was damage control after furlong was fire. Damage control. What? What damage are they trying to control? Matthew Furlong hasn't even sold his share yet. He still have his shares right now. Another negative earnings. What negative earnings? You're speaking nonsense, sir. I don't know. I don't know who. Like, over here? What negative earnings? Right here. This is when he bought it. Right here. That's negative to you? They beat on earnings by 6%. So, I think that's half and half, no? I know people care about the top line revenue BS, right? But if they decrease their top line revenue by $100 million right there and still come up ahead, what does that mean? What does that mean to you? That doesn't mean anything to you? If they don't sell goods, but then they profit more, that means they're wasting money on selling those goods and services, right? Or expanding the top line revenue. That's why they're able to even coming ahead, even though they were losing $100 million back then. I'm not saying now. Of course, now it's a lot better here. Like this one. How about this one? That's pretty good earnings, no? How about this one? That's pretty mighty earnings right there. No? Quarter two? This is quarter two? Is that what you're talking about? This is quarter three, quarter two, right here. That's beating earnings, no? Look, green. Green mean beating, no? What quarter two are you talking about? Like the previous quarter two? 2022? Even then, look, they beat earning again. So, I don't know. I don't know what else you want me to like show you here. I mean, I feel like every time you try to disprove me, I find out like, oh, look, they're actually beating on earnings, right? This one, okay, a little miss there. Sure. Beat, right? So, I tell you my whole village about... Oh, wait, I told you about... Hi, Anthony. I haven't seen you in a while. Thank you for joining. They all say he is... Oh, I don't know. Let's be nice to each other. Come on. Like, I know, he coming in here attacking Gamestop and all that stuff. So let's not call people's name. Whatever happened in the past, let's just leave it behind. But, I just ask people to be respectful to each other. And, I get it. People get heated and all that stuff. And but there's no need to fight whatsoever. We could be civilized and agree to disagree. How about that? A beat doesn't mean positive. Huh? What? That's okay. All right. A beat doesn't mean positive. Gonna make a profit. We are making a profit. What are you talking about? And grow revenue. Okay. Not cut to bones and create zero revenue stream. Huh? So are you saying that in this environment you should be expanding? You should be doing everything wrong so that you are over leveraging yourself to the point of what? What are you talking about? So of course, don't you I don't know how many business that you've run so far or whatever. I don't run a business myself, but even with my job, sometimes you have periods of management saying, hey, we're on a budget, so let's do everything we can to cut on costs, right? So, I mean, isn't there a period where you kind of like, hey, this is not going well because the macro, economy is not doing well, so let's try to do everything we can to preserve as much asset as possible, right? So that we could survive in the future. So to me, that's value created. Yes, it's just reining in on spending, we're not expanding in revenue, but yet we are expanding in gross profit because we do all those difficult things, right? While people are expanding like crazy, we're not doing that because we're being responsible, right? We're being a good steward of our asset in order to create an environment where we could survive when it is the downturn, right? When consumer is not spending as much as they were before. If you hadn't heard about the news lately, I don't know. Consumer spending is to the point of buy now and pay later is their thing now. And if that's a good economy for you to want Ryan Cohen to expand, if Ryan Cohen were to expand using the 1 point whatever billion dollars that they have, it wouldn't make any sense because then they wouldn't have anything else to go on, right? I mean, look at the comparison between Ryan Cohen and Adam Aaron. What did Adam Aaron do with that $2 billion? He expanded. He wants to expand the revenue stream, right? Popcorn, freaking, what's the other one? A candy now. Now they're trying to do freaking what? Winery. It's like all of those BS thing. And again, it's overextending yourself to the point where you don't even make any gross profit, but just higher revenue stream. Really? Did you really want them to do that? It makes no sense, right? If they could cut and then make more money, why not? Why overextend yourself to that point, spreading yourself so thin, to the point where why? You want them to dilute shareholder in that way? It's like, what? What do you mean zero revenue? Do you not understand this? What is this? Is this zero to you, Winthrop? What do you mean, zero revenue? Burn $700 million on NFT. Come on. They have that money to burn. And they didn't. They actually make that back. What do you mean, burn? There's no burning here, okay? Winthrop. I don't know what else to say to you. Okay. So let's look at the shareholder equity, okay? This is what shareholders should be caring about, okay? So, ever since Ryan Cohen got in, I think this is the point where he got in as a chairman or something. No, actually, right here. He wrote the letter. Shareholder equity, right here. This is when Ryan Cohen got in, right here, okay? Alright? So the $700 million that you're speaking of, Winthrop, can I please show you this? And I hope that you don't bring it up again because it's annoying. So when Ryan Cohen got in, there you go. Shareholder equity, right? Why do I use shareholder equity so much? Because I'm a shareholder. I don't really care about what other stuff, right? Other stuff, again, financial gymnastic over here, right? It makes sense, yes, it's doing pretty well in my opinion. But let's look at shareholder equity. Why? Because I am a shareholder, all right? So, look, 3, 100. What are you? 0 on... Oh, okay, on the platform. Well, I hope you understand what's going on in the crypto space, right? Of course it's going to be 0, but again, they did make some money. You know, maybe 100,000 something, like a very low amount. But come on, like 0? Crazy. But anyway, they didn't make $1 back. What are you talking about? It's not just an NFT thing, okay? Like, they have other business over here, brick and mortar, right? Retail, e-commerce, all of that. It's like, what? So, you're evaluating as if GME is an NFT marketplace. It's not. It's just one part of, you know, a blip in history. Yes, it was a black eye. I get it. You know, but in my humble opinion, I think they still have the trademark. They still have, you know, all of that infrastructure. You know, perhaps it's going to come back. I don't know. If it doesn't, okay. I'm sorry. You know, they did that. But to say that he burned that much and not take, you know, seeing what you're seeing right here. This is why I want to show you the shareholder equity part, because you seem to think that he's like burning this much money and just out of like a heated, you know, what is it? Just because he want to screw shareholder over. No, of course he's trying to do, at least he's trying something, right? So, but anyway, for those of you who curious about this, look at the shareholder equity. It's been going up, okay? And again, like before you said something about this share dilution thing, yes, they did sell shares to retail in order to get some of that money, but they've been maintaining it. They have been maintaining it, right? And again, you know, every single year, right here, trailing 12, you know, we want this to be maintained. Now, yes, you might say, oh, it's down $100 million over here every year. This is a yearly thing, right? And so, if you look at the cash balance right here, oops, sorry. So it went up, it went down, up again, went down, and then now it's about to go up again because it's the fourth quarter, right? So we're still waiting on the fourth quarter number. I'm liking what third quarter is telling me. So, I mean, what? Shareholder is declining rapidly. Rapidly? What? Define rapidly. So, it's like you're saying they're burning what, $700 million just on that. Do you actually think that was just the platform alone? They make other stuff too, don't you think? Don't they spend it on inventory? No? What is this? Look. So you're saying he's burning it on on the NFT marketplace. Look, inventory, okay? There's such thing as inventory. Property, equipment. So, look. Property, equipment. From 300 million 2019 up here. So they did spend on that before he even got in. Hold on, let me see. Hold on 1 second. So he got in here. This is when he got in. Beep, beep, beep. There you go. Increasing. Little by little. Not by much. Inventory. Right? So that $700 million, was it like just 1 year? Or 2 years? Or 3 years? It's like when you say, oh, they spend $700 million on just the NFT marketplace alone. It was a shot to grow and fail. Okay. Shareholder equity is declining. Unless you take you take question. Most you do the mute question. Or at least you take question. Yeah, I mean, I'm always up for a debate, or at least, try to address your question. But every time you come in here, you always like, oh, they spend this much and that much. Like, okay, they fail. So what? Look at the balance sheets. Is it like to the point of misery? To the point that they can't even get up and go anywhere? It's like, so how do you make of this balance sheets right here? How about tell me this. From losing this much to now losing this much, how do you explain that? What's your assessment on that? And knowing that they burned $700 million, as you said there. I'm waiting for your question. I'm waiting for your answer. You know what okay, hold on, let me see. I'm trying to find a bad thing about this. Hold on. I can't. I don't know. I cannot find anything that I don't like about this balance sheet here. Let's see. Pre-tax. Split. Yeah, it's a solid balance sheets. I don't know what else. Even though they're wasting money over there, I mean, to waste that much money, quote unquote, I'm using your term here, Winthrop. They're wasting money. They're burning $700 million, but still coming out ahead in this way. So imagine if they didn't burn that $700 million, it would have been in here, right? Wouldn't you agree? So, and that's within a time span of what, 3 years? So they would have had more cash on hand. They would have had more cash on hand. So if you add that $700 million to this, they would have had $2 billion, close to $2 billion. That's a pretty good, deal, in my opinion. At least they're using that money to try to make something out of it, to try to compete in the market. Yes, they fail, but hey, it's not the end of the world. Like if you go run a marathon and you fail one time, and you just don't get up, what does that say about you? Of course you want to go get up and go again and do it again. It's not defined by your failure. You're defined by, sorry, people are not defined by their success. It's defined by how many times did you fail before you go to get that trophy, right? So the fact that they fail one time, so what? It's as if like they're you're writing him off as the biggest failure in the world. No. I disagree with you, sir. Okay. Sorry, Mimo. I know. I'm sorry. I appreciate that, though. I can just be respectful. Appreciate you. I'm glad he tries to fudge you with all these comments. Now you're able to explain and disprove all of the well, I try my best. Honestly, here's what I'm looking for. I'm looking for people who could educate me or could at least change my mind about this company, right? Again, I don't want to be wrong. I don't want to be hyping my, get caught up in the hype, right? Because we've done that before as human being. Either side is always the extreme of something, right? And to me, when you're trying to decide on a company or, a investment that would last you, through your retirement year, you want to be careful, right? And so there's a healthy dose of, people coming in and tell you something that might be right, but then you have to verify it yourself, right? And so, yeah, there might be something that I don't know about this company that Windrop over here might steer me to that. So I would be appreciated if that's the truth. But usually, those type of thing is just a short-term thinking type thing. And I want a long-term analysis based on numbers, based on what's going on in the economy, right? If you want to make sense of this, investment, you want to know all of that. And the negative point of view is just a point of view. But I hope I make sense. I'm looking for people to disagree with, that I disagree with, because I find that when that happens, it makes me more convicted in my own beliefs, right? Strengthen it, or questioning it. So it's always just my own personal growth in my own experience. And anytime I seek somebody who I agree with, I'm just like reinforcing my own belief here. So that's not what I want. So, but anyway, thank you. Give out all the facts. Thank you. Apple fails a lot of projects. Yeah, that's true, right? There's a whole bunch of stuff, but they still propping it up, saying it the greatest company. I don't invest in Apple right now, so I don't know much about what project that they do. I don't follow them as much as GameStop, because I think the biggest value in the market right now is GameStop. Again, this is my opinion. You could take it or leave it. Simply because you have a company that is small enough in market cap right here to set up for that success later on. And you have a top, leadership, like top notch. In my opinion, obviously, Windrop's probably disagree because, he thinks Ryan Cohen doesn't really do much for the company. But I think he's doing immensely for the company. More than anyone could have done. And on top of that, he's not taking a salary. Like, name a CEO that does that. Ridiculous. But yeah, I mean, I'm still waiting for your response here, Winthrop. Like, what do you make off of this number right here? Knowing that they burned $700 million, like you said. So if they hadn't burned that, they would have had more money, right? Yeah, and it would make them even better. So, ay. Alright, well, I think that's all I have, right? I mean, if you have any question, comment, concern, all of that. How long have I been rambling on today? Oh, close to I'm so proud of myself, you guys. Like, I've been live consecutively, and been doing it 1 hour at a time. And well, before I go, I would like to thank everybody, because without without you guys, I wouldn't feel as energetic, and just here, kind of chill and disagree, agree to disagree, whatever, and just be respectful to each other, right? There's no need to be, fighting each other, because at the end of the day, this is just a company, right? In my opinion, it's the greatest company on earth, all right? The greatest leadership on earth. I don't know. Some people might agree, some people disagree. But I'm curious to see about the future of this company, right? I think they are doing the right thing when people are not watching, and when people are bashing it each and every single quarter. We are putting out the right number over here, right? So I don't know what else to say about this company. Like, what not to like about this company? Oh man. I mean, the NFT marketplace too. Let me just rant on that a little bit here, because that was my previous kind of drawn to it, because I was in crypto, right? But as time goes on, obviously, that was a platform that could have been, oh man, like attuned to like iTunes type thing, right? And again, like, because NFTs and blockchains and all that stuff, it was too high of a intellectual level type thing, or technically too high. Too many people doesn't know what to use, how to use the blockchain, right? And so it's just, what is it? The accessibility of it wasn't for regular people. I think that's why it's more kind of like on the kind of small growth type thing, right? But of course, like I've addressed this before, because of the regulation, right? The regulator out there are not allowing it to happen, right? And it's not just Gamestop who's affected by this. Many other industries are affected by it. The mining industry, coal mining, sorry. Bitcoin mining, crypto mining, all of those industries are being, attacked, so to speak. And people who are developing on the blockchain, space, know about it. There's a guy by the name of Eric Voorhees. He's talking extensively about, how this space is important to the, to the liberty of people who would be able to own their own asset if they could too, right? Again, within the context of, hey, you have to work with the regulator and all that stuff too, because they always use this card where, oh, hey, it's a scam, right? It's used by terrorism and all that stuff. It's BS, right? Terrorism use cash too. How about go after cash? It's ridiculous. It's all about, trying to infringe on your rights to compete. So, GameStop just got caught in that, and at least they're trying some new things here that they're not afraid to venture out. So, for that, I applaud at least, leadership to do that. And the fact that they rear it in because of the regulation, right? Because of the regulator, that's a test to the regulator. They don't have any clear rules. Right now they have ETF, but they have no law saying Bitcoin is this, ETH is this, right? Whether it's security or commodity, they didn't even clarify that. So what does business supposed to do if they want to get into this space? So therefore, perhaps we're too early, right, into the game, and so we just have to wait until the clarity is being put, and then we'll think of something else. But currently, hey, we're a holding company right now, right? And so we're not in the rush to use that $1 billion for anything. Currently, we're just autopilot, right? Our company at the moment, in my opinion. I mean, $8 million loss over the past 12 months. That's not too bad, right? Rather than $500 million used to be last year. And so, I think that's a huge improvement there. So, it's remains to be seen. I'm excited for the, March, and then we'll see. We'll see if the whatever. Leroy here says, without Winthrop, new investor wouldn't know truth from lies and misinformation. Yeah. Thank you, and I appreciate you. Great job. All right. I will see you tomorrow, and thank you for sitting through all this. And thank you, Winthrop, too. So, bye.